Hello everyone. Today we discuss about the costing techniques. Some of the most popular costing techniques are, now we discuss about these historical costing techniques, uniform costing techniques, marginal costing techniques, absorption costing, direct costing, incremental costings and standard costing. So first of all we discuss about the historical costing techniques. As the name suggests, under this method, first the expenditure is incurred and then it is recorded and accounted for calculating cost of production per unit and total cost of the product or service. But this method is like a post-mortem of cost of production. This method cannot be applied for measuring efficiency of the cost center and of the organization also. This method even fails to guide in cost control. Number two, uniform costing. So when several firms in the same industry adopt the same principle of costing, accounting for comparisons and consultations and guidance, it is known as uniform costing. So under this method, the same method of the absorbing overhead, same method of charging depreciations, some method of valuations of stock, etc., are adopted by all the firms. Those have agreed to apply uniform costing. The technique helps in comparisons of performance of one firm with another or the results of a firm with industry as a whole. This method of uniform costing can help to put forward the case of the industry as a whole for tax relief, subsidy or protection, etc. Now, number three, marginal costing. Marginal cost may be defined as the change in the total cost due to the change in output by one unit. It means the variable cost of a product is marginal cost. Fixed costs are charged from contributions if the contribution, that is sales variable cost, is more than fixed cost, the difference is profit, and if the contribution is less than fixed cost, then the difference is a loss. Now, thus we can say that margined cost or costing is not a method of costing, but it is a special technique which helps the management in taking various managerial decisions like the effect of change in output on profit, the effect of increase or decrease in the selling price also, level of operations for break even points, etc. The marginal costing regards only the variable cost as the cost of production. Fixed costs are considered as period cost, and these are not allocated or appropriations to individuals cost center or cost unit. Hence, the fixed costs are deducted from contributions. Now, absorption costing. Under this system, both variable cost and fixed cost are charged to the cost or cost unit on some appropriate basis. So, under this technique, both fixed and variable costs are allocated to the product process and operations, etc. Now, direct costing. Under this technique, all costs which are direct to the product, as you all know, process or operations, whether fixed or variable, are charged to the cost center. All these or those costs which are not direct or directly related to the product are transferred to or written off against costing profit and loss account. All indirect costs which take the place during the period are transferred to profits and loss account of that period. Now, incremental costing. This is a technique of cost accounting which studies the change in cost and change in revenue due to the change in level of output or productions or in the method of productions. So the additional cost and the additional revenue are analyzed for decisions making by the management. Now, standard costing. Standard means a measuring yardstick against which the actual performance is measured and remedial actions is taken in case of variance, difference between actual and standard. Under standard costing system, standards for each elements of cost are set in advance before the production takes place. So variance are calculated and then these variance are analyzed for taking corrective actions. These standards are set on the basis of the scientific study of productions and its elements of cost or on the basis of the past experience. Standard costing thus is a technique of cost ascertainment and cost control of the product. Now, cost techniques, historical costing, uniform costings, marginal costing, absorption costings, direct costings, and incremental costings and standard costings. So, the top most popular costing techniques I mentioned earlier. So now historical costings in these products cost, materials, labors and overheads are ascertained after they have been incurred. Normal costing, this is an improvement over historical costings. In these productions cost can be ascertained even before all the costs have been incurred. This is done by using historical or actual cost of materials and labor and predetermined rates and overheads cost also. Now, thus normal costings differs from historical costings only in the treatment of overhead. Now, it's termed normal costings because the overhead are applied to products on an average or normalized basis, that is using budgeted overhead rates. The product cost so determined is called normal cost. Now, standard costings, it involves the pre-preparations of use of standard cost, their comparisons with actual cost and the analysis of variance to their causes and points of incidence. Now, absorption costings, this follows the practical of charging all cost, variable and fixed to operations, processes and products also. Now, marginal costing, this is a technique of costing which considers only variable cost for decisions making, and in this an ascertainment is made of marginal cost and of the effects on profit of changes in volume or type of output by a differentiation or differentiating between fixed cost and variable cost. Now, in this, only variable costs are charged to product and processes or operations, while fixed costs are written off against the profit for the period of in which they are raised. So the term direct cost or variable costing is used for marginal costing. So direct costings, this cost or fixed as well as variable and identifiable with the product, services, jobs or activity are charged to the concerned product, services, job or activity, and all indirect costs are written off to the profit of the period in which they arises. Now, differential costing, a technique, a differential costing. So, a technique of costing which use differential costings or indifferential revenue for ascertaining the acceptability of an alternative is called differential costing, and this technique may be termed as incremental costing when the difference is increase in cost, and decremental costing when the difference is decrease in cost. Now, costing techniques used for cost controls and decision makings. The following are the types of techniques of costing applied for the cost control and decision making. Now, historical costing, in this ascertain of the cost after they have accrued or incurred, it aims at ascertaining the cost incurred on the work done in the past. The ascertaining and recording of actual cost after they have been incurred is called historical costing. Now, standard cost is a predetermined cost, as I mentioned earlier, and standard costing is the preparations and use of standard cost. So they are comparisons with actual cost and the analysis of variance of their cost and points of incidence, that is CIMA. Learner, it controls cost and improves performance also. Marginal cost under these systems of costings are classified into fixed and cost and variable cost. Only the variable cost are charged to products under marginal costings. These systems of costing is very important for taking managerial decisions. Now, direct costing, I mentioned earlier, absorption costings. It is a practice of charging all costs, both variable and fixed. Operations, processes or product, it varies from marginal costings, where variable cost only are charged to products. So now, his absorption costings, as mentioned earlier, it is also known as total cost approach. Under this technique, all cost, both fixed and variables. And standard costings, standard cost is predetermined, as I mentioned earlier. So everything you need to know about costing techniques. Cost may be allocated on actual basis or assigned on estimations or standard cost basis. So cost accounting implies a systematic arrangement of cost related details. So ascertaining costings after they are actually incurred refers to historical costings. Historical costings is ascertaining and recording of actual cost when or after they have been incurred, and was one of the first stage in growth of the cost accountant's work. It is known as traditional costing. So standard costing is a predetermined, as I mentioned earlier. The standard costs are set in advance for different elements of cost, and actual are ascertained and compared with standards. These difference termed as variance in ascertained causes are investigated, and suitable actions is initiated to correct unfavorable variance. Standard costings control cost and improves performance also. Now, costing techniques, standard costings, budgetary costings, uniform costings, marginal costings, and absorption costings. So costings is the technique or process of ascertaining cost. The object of cost accounting is the determinant of all cost. The cost may be allocated on the basis of actual cost incurred or cost, or may be assigned on a standard cost basis. A system of cost accounting implied that there is a planned and a coordinated arrangement of all matters related of costing, that is a systematic planned procedure is to be followed. So now we costing techniques used for job and process costing. Costing techniques present the principle of basis which governs the cost computations. So these are the mechanics for immediate tasks on hand of determining cost. Techniques are not tied down to the methods. The same set of techniques could be used for job and process costing. So techniques, absorption costing, I mentioned earlier, and the absorption costing is also known as full costing, total costing, or cost attach, is a technique of accounting in which all terms of cost, irrespective of whether they are fixed or variables, are absorbed or charged to unit of productions. So the Charter Institute of Management Accounts defines the terms absorption costing as the procedures which charged fixed as well as variable overhead to cost units. Under these techniques, fixed manufacturing overhead is unit tested. So that is averaged and assigned to products. The result is that not only the cost of goods sold, but the ending inventory levels are also determined by these total cost. Now, Chartered Account Institute of Management Accounts defines the term marginal costing as the ascertainment of marginal cost by differentiating between fixed and variable cost, and of the effect on profit of changes in volume or type of output. It is technique in which only variable costs are charged to products. It is based on the fact that fixed costs are incurred on a time and should therefore be written off in the period in which they are incurred. In other words, fixed costs are regarded as period cost and charged against the revenue of the period in which they are incurred. End inventories of work in progress and finished goods are also valued on the basis of variable cost only. And marginal costing is a vital aid to management in decision making. So that's the end of the video, my friends. If you like my video, please subscribe, comment and share my educational channel. Thanks a lot for watching.